Good afternoon and welcome to the daily roundup with ForexAnalytix. And we've seen the euro make quite the turnabout here. We'll take a look at it here on the 2-hour chart. We were discussing in the chat room when we were going lower and we're making the, trying to push it lower, and we're saying, hey, look, the thing ought to be, the euro ought to be sub 109 because Draghi's throwing everything but the kitchen sink at it. And we did see a pretty good turnaround here. Quite a few of us picked it up near those lows. I mean, I didn't stick around for too long. Some of the guys worked a little bit higher and some came back and bought. I bought actually just, not that long ago, Blake posted some an interesting story in the chat room, and I was able to scalp out as we jumped up to these highs. But I was doing some other things also, and I had that dollar yen from yesterday, which I was able to get out. Got out a little bit too early because buy chart support had us at 952. And go back in here. Yeah, and 752. We actually made it down there, and I covered earlier, but I was, it wasn't a, excuse me, it wasn't a very big position at all. But with the whole thing about the making a deal with China and delaying and all this other stuff, it certainly gave the equities a push, and dollar yen got a push also, and just a little bit with crude oil and something else. I don't even remember what it was. Oh, this boost, just a little bit there. But yeah, I wasn't looking for it to go to new lows in here. And I got two things. I don't know why that kicks on music if a phone call comes in. Hang on, let me just turn down the music. Bear with me. Sorry about that. There we go. I don't know why it does that, but anyway. But that being said, so we saw a good little comeback here with the euro, and part of that was predicated on the move that we were seeing here in the bunds, and we'll move on to that. You can see here, look at these bunds. I mean, they have really come off. Now, I shared this chart. Doggone it. Hang on. Well, that's great. Hang on. If it's not one thing, it's another. Let me load this up real quick. I don't know why the heck I did that. There we go. Now, if you look here and clear this back out. And that's actually the 10-year yield. Look at that thing; it's zooming. But look at, and obviously the bunds. This is actually the bund prices themselves, and you can see here they're rolling lower, and obviously an increase in rates. You're thinking, what the heck is going on? I thought the ECB was just lowering rates and starting their QE and everything else. But you can see here we've actually been diverging over the last week with the bunds, and boy, they have really come off quite a bit. And lower lower bund prices inverse to higher bund. Lower bund prices and with bund yields, if they move lower, obviously they're moving higher now. They move lower. Then that ultimately ends up hurting the euro. That's what happened about 6 weeks ago, as this bund continued to break higher, lower in yields, and drove the euro much lower. Well, now we're seeing the opposite. So obviously prices, in this case, prices going lower here with the bunds, and inversely the yields going higher, which is pushing the euro much higher. Now you're seeing also this here in, someone was asking about the gold. One of the guys was trading gold and he's saying, what the heck's going on? I thought there's a race for zero. I go, well, it may be a race for zero, but look at the yields. That's what's, this is the whole thing that predicated the move in gold to start with, which is what I've been, arguing or pointing out for, some time while gold, everybody kept saying, oh, gold's doing this because of the dollar. Well, the dollar, right now it's a little bit lower, but this whole move in gold was predicated in what we had seen here in yields. And when yields came apart, boy, then gold went the other direction. And now we're seeing yields really take off. I mean, we'd come into this resistance a couple of days back, and I thought this was going to hold, and made it up here to the 38%. We bounced up here, and it looked like we were going to roll back. And boy, look at us, we are just climbing away. And inversely, like I said, you're seeing here with the gold's getting a bit whacked over here. Let's pull this back, and I'm looking at the spot. But you can see here we're really making a drop, and we may end up seeing this thing drop even further as yields continue to push higher. Now, like I said, one of the key things here is the bund is, and keep an eye on this bund. This is, and we talked about this. Look at this move since the course of the year. Look at this. It's actually since October of last year, almost a full year, and this thing's just been up and away. But you can see over the last week, almost couple of weeks, this thing has been diverging lower. And so when the ECB did their action, we jumped up, and boy, we quickly lost that. And we've come into, which is a good support level, 75.84. Now, I shared that, and we actually rallied up to, I think it was like, 76.04, 76, whatever. So we rallied up, about 20, 25 ticks. But look, we're rotating lower again. If this thing breaks lower, man, and we, you generally get a little bit of overshoots, but we can really do some damage, and that could ultimately end up pushing the euro much higher. Now, we have seen the S&Ps go up and down like a freaking yo-yo. We had the thing with the China thing. Trump was going to go on and wait 2 weeks to do the tariffs. Then we rolled back lower, but then we actually had moved live. This is on a 5-minute. Let me go on and move this into a 2-hour. And get a little bit better perspective, so to speak. And then then we got this whole news about, okay, now they're going to reach a deal. So we turn around, we run back up, but now they're saying, no, they're not going to do a deal. And so now we fell back down, but we're kind of sitting here, so we'll see what happens. But I'm thinking that S&Ps are going to have a tough time if these yields, and you have to take a look at these 10-year yields, if they just keep climbing. We've already gone past the 38%. I mean, we're really clipping along here now. Like if you look at this from way back when, it doesn't seem like the move, but the immediate move, golly, remember it looked like bonds were a one-way trade, and now people are just getting absolutely smoked that thought they could just stay with that. And we are continuing to move. I thought maybe we definitely would have taken a pause here at 175. Pause, nothing. I mean, now there is a little bit of resistance coming in right there at 179, and we're almost there at 179, so maybe we'll get a little bit of a pause here, but holy smokes, man, we are just continuing to just, get up and go on these things. So to get back into the main chart, our main screen, here's this dollar CAD. Now, we did go and get up to the 3205 area here, and we turn around and, God, if it's not one thing, it's another. Something else went wrong here. But anyway, and we backed down. This is when crude oil, now Trump was maybe going to go on and ease things with Iran a bit, and we turned around and jumped right up, and then we sold off or somewhat, came back down. 3205 was our bias chart resistance. Actually has been the bias chart resistance here for the better part of the week. And we had 31.36 as that, and we kind of rotated back and forth, but we launched up. But we did talk about this in the analysis to start the week was we would need, you can see here, it says initial support is 31.36. That's at the beginning of the week. Resistance is 32.36. A daily close above 32.52 will neutralize the downside momentum. So if we get a daily close above 32.52, that would do just that, neutralize that downside. We'll see whether or not that's going to happen or not. obviously crude oil has taken its own tumble. So we've seen quite a bit of movement where certainly volatility is back in vogue here in these markets. And we're also seeing that here with FX also. We did go in and take a look at the cash dollar index, and now we're making a move down here. Potentially may come down here to this 98.14. On the daily, it's 98.21, but you can see this zone right in here, the lower part of this zone. We still have the potential to go and go lower. And I think we may not only go lower there, but we may even take this out and overshoot it, potentially all the way here to 97, 98, potentially. And that might be, once again, on this backdrop as this boon continues to stay lower. And these are going to be, think about this. The ECB, starts the quantitative easing or the bond purchasing program, revamping or restarting that thing again, doing their bit with rate cuts. And instead of, a bunch, the boons taking off, you see the boons, coming off quite a bit. If you look at the boons, they're already off over 200 ticks for the day. That is absolutely huge. So this is something that are looking for a move that probably continue. And on the backdrop of that, potentially you can see this euro also make its move. And so this might be a move that keeps on going, especially, like I said, can you imagine that on ECB day, we not only didn't take out new lows, we ended up turning around and rotating back, and this just may be the start. And the next real upside target is going to be this 1160. That's the real upside target. This 1160, actually on the way back down, after we'd made this run up here, this is about the area where when the boons started making their next leg, and then Christine Lagarde was going to be chosen as a person and to lead the ECB, and from there the euro it never recovered. But boons were making new highs in prices, new lows in yield, and it just kept on going. And so, like I said, right now, to me, the next true test, you can see there's some other areas. 1131 will be interesting and key. It's also the 78%, but the real test is going to be this 1160. And be careful. This thing might run right up in your grill. I wouldn't, that's one of the reasons, like I said, I thought that we would end up holding, and but I wasn't sure how this whole thing was going to play out, because I thought there was going to be a lot of back and forth. And initially we did, but the euro kind of stayed on the bid and had staked that. And I'm thinking, you know what, not going to trying to rush into anything. I was a buyer down here. And some of the other guys, they also jumped in. Some of them stayed a whole lot longer. And I've just kind of danced around in a few other markets. But other than the late trade also on this one, I came in. But be careful on this. I would not be shorting this euro. I would not be shorting. I did, like I said, I had the opportunity myself to get back long again here when it got in this 1030, and I just didn't take it. And we ran up there, and then we turned around, we came back down. And, I had a pretty decent day, and I just wasn't going to go on and put that risk, because I knew that we could maybe – the case with the euro's been, that is just keeps on. Every time the rally, we turn around and sell right off, and I'll go, I'm not going to put myself at risk. I'll just wait, because if we do make this move, there'll be a lot more to come about. But I tell you what, I would be very careful trying to step in and short this euro because of what's happening with bond yields. We did see the cable come down right into our bias chart support that we had here. And we actually had it for the last couple of days here, which was the the 2282. We saw a nice bounce off of that, about 60 pips. Saw here with the Eurozone, I think there was a headline about them looking to approve another extension of the whole Brexit thing. So we came up with that. And then the dollar yen, this was a little bit frustrating. I kept thinking, me and Dale even talked about that about a month and a half ago or a month ago. I thought that we'd get a return back move to this 107.88, and but it never came to be, because the dollar yen just turned around and took another tumble lower. But eventually did, and yesterday I was thinking, okay, it's going to get there. We're going to take out those stops. And when it didn't, I'm like, okay, well, I might as well go and get short. And then all of a sudden, the whole headline about Trump and the whole thing, and then we turn around and rally. I'm like, well, I'm going to hang on. It's a small position. I feel confident with it. But then with all the turbulence we saw this morning, as we dipped lower, I got out with, I think it was about, it wasn't even very much. I think it was like 10 pips or maybe even a little bit less than that. The thing that was a little bit frustrating is that, kind of funny in a way, but not really, had the bias chart support there for 752, and that's exactly what we went to 752. And then we turned around and rallied back up and thinking, man, I should have just gone and just stuck with the bias chart. But one of the things I wasn't happy with is because, like I said, if you things that you can't control, of course your technicals are going to keep you in a sense out of harm's way, because you look and see if it gets beyond this level. But once again, like I said, with the whole thing and Trump trying to do what he can do, keep his situation favorable, and the whole thing with the China and the trade talks, I'm thinking he's probably trying to go and spin something. I don't want to be in the way. So if I can get out, which I thought we'd dip back, but I just wasn't going to hang around until 752. But the thing is that we have gone and rotated back up again here. And the reason we're doing it, well, we can just go with market 101, which is jumping all over the place. Look at 10-year yields. You know, I used to have the old saying, excuse me, it's all about the ZB. When I talk about the yen, it's all about the ZB. Well, that's the code for the code for, you know, the 30-year bond. But because most people follow the 10-year, that's what I've been putting on here. So, but you can see here 10-year yields are going higher. So hard to fade a dollar yen if 10-year yields are now, they're even trying to break out. Although I think we do have some resistance coming in right there at 179. You see that 178.8. So I think we could run out of gas right here. Maybe take a pause here, but nonetheless, they are pushing higher. I mean, think of it this way: anybody who's short, they'll be looking to buy back on any dips. So whether this hangs around or not, we still can't fight. It's going to be difficult to fight it. So when you're looking here at the dollar yen, this is not a bad area here, this challenge back to 108. But if you were just hell-bent to sell the dollar yen, I would re-engage at around 827 to 78%, see if they can push up a little bit higher. But this whole thing, though, everything going on with China and this whole tariff situation, and there's a couple other things that are going on that has the potential to push equities even higher, although I think they've kind of stretched themselves, but they're here at 3016, so we'll see what happens. I think they're a little bit overdone here. But nonetheless, like I said, I don't want to get in the way of a situation like that, because one of the things that, and reason I'm saying that is because I'll go on and use an example, and that's probably why I was a little bit gun-shy. And we'll go on and jump into that. And I pointed that out yesterday, and I pointed out again this morning in the European crossover webinar. And this is a thing that was frustrating and probably left me a little bit cautious. I wasn't very aggressive today at all. Let me go back in here, which was this Aussie yen. And so I had mentioned to y'all before is that I had taken a short on this market, and then I think I got out for a few pips. I'm always scalping. And then I shorted again, and I added as it went even higher, and I was able to cover the ad. And I covered the ad very good, very good. I didn't give him that much, but I covered it just at the perfect area. Market might have dipped to maybe a few more pips. But one of the things I noted when I covered, which was pretty stupid on my part, and I always say that, follow my technicals, is that I think it was right in here, or I don't know, maybe I don't know exactly where it was, but I said, or maybe it was here as it did back. I think it was here when it did back in here. And I said, hey, you know what? I just covered, and, you know, I definitely got covered right now. We're going to write it back down. So I said, it just generated a buy signal. So, hey, dummy, if it does that, then why the heck are you going to be short? But I kept the short. And then look what happens. This thing just motors on higher, and I ended up getting stopped out, you know, during, you know, overnight. And so kind of ticked me off. And we did come back down. It was frustrating to watch this thing come back down. I didn't want to go back in it. And although we had a couple of spinning tops here, so I had the opportunity to get back in and jump out. But eventually, like I said, you know, I got in with just the dollar yen, and then we turned around, ran up. I'm like, well, I'm glad I'm not in that anymore. But we did take another dip back. But the point is we got a buy signal in there, and I should have at that point just said, hey, you know what, get out. And I think for the day, I think even with that, I think I would have been up a few pips or maybe around flattish or something like that. I should not have ignored my technicals. And I told you that's why I keep my charts. I keep pretty. I don't use RSI. I don't use stochastics. I just pretty much just use the charts, the levels, Fibonacci, and I do use my exponential moving averages. And I tell you, I use them most of the time to just make sure I keep myself out of trouble. Where sometimes, as I told you, I'll see a market and go, oh, this is an excellent place to sell. And I'm thinking, oh, wait a minute, it's still on a buy signal. Don't be so quick to go in and jump in. So once again, like I said, you got to use those technicals to go in and keep your risk in check. That, you know, however you're doing it, however you use momentum, RSI, stochastics, ADX, whatever the case may be, or other technical indicators. You know, one thing about technicals that it can allow you to go in and keep those risks in check, where you say, hey, here's my uncle point. And it really is important, and I'm guilty of not doing that, is when you put on a trade, know where you're going to get out. Blake always says it. Where am I wrong? Where am I wrong? I mean, if you look at a trade, you go, oh, this is an excellent area to be short. Where would it not be if it got to this price? Okay, if it gets that price, then you got to get out. I mean, like Blake always makes that point. It's okay to be wrong, but it's not okay to stay wrong. And really, if you use that, keep that mantra and keep that mantra in your head and say, hey, you know, I mean, you know, I saw a couple of people noting over the last few days talking about trading, and they say, you know, quite often investments are, you know, trades that didn't work out, and so the person hangs on. And I've been guilty of that myself. So it's important, like I said, not only that is that, you know, what losses are part of the game, and the bad thing is if you do hang on, not only do you incur a larger loss, but then you have to end up, it's harder to make that back. And so even though, like, I guess I was kicking myself, like I said, with this Aussie, and although I had an okay day today, it was a nice day, but I could have done a lot better, and I could have been a lot more aggressive. And some of the guys in the chat room did very well, and I could myself could have been doing very well, but I had already taken, and it wasn't that bad, but I'd already taken a stinger, but on this one, but it already put me in a bad thing. I mean, losses are part of the game, but the thing is, I never should have been in that trade once. You know, I said, hey, you know what? It's got a buy signal. I'm going to make sure I cover this second short. Well, I should have gotten out. And I even thought about it. I said, you know what? I should just probably maybe just go in and get out because it's got a buy signal. But once again, like I said, you know, other things took over eventually with the whole thing about delaying tariffs and all this other stuff. But nonetheless, the charts were already telling me that, you know, you shouldn't be short. But I thought I would go, that was important to go and share that with you, because I tell you what, we learned the most from our mistakes. Let me go on and switch back into the main screen. So you can see this euro is still keeping its bid on, and that's also has a lot to do where the market has come back from. Because really, if anybody's short, then you know that the market's not going to, at this time of the day, it's not going to turn around and roll right back down. You're going to have people that are short. They're looking for any dips to cover. So you're going to keep maintain, you hear me sometimes say, maintain an undertone bid. And that's probably what we're going to see in the euro. Doesn't mean we're going to blast off right now. We may start to work higher tomorrow, but at least for now, an undertone bid, because any dips back, anybody who's short is going to say, oh man, if I can get it back to 1040, I'll gladly cover it. If I can get it into 1032, I'll gladly cover. So there's that undertone bid. So other than that, like I said, what we saw in crude oil, obviously crude oil continued to weaken. Other reasons that, you know, once again, we all, you know, you want to respect the technicals, but they always say overwhelming fundamentals will always kick technicals in the A. And so you're seeing that basically right now with crude oil also, where we've seen a pretty big sell-off in crude. And so once again, you have to be careful. Now we'll finish up with that. I'll just go and touch on this quickly. When you see the markets change like this, you got to be careful and not be too quick to step in, because you think about it, on the way back down, there's other people that are going to want to go and jump in. There's other people that may have got long. They'll say, here's my stop. So quite often when you see a market turn like this, you got to be careful, and what they say, not try and catch a falling knife. Or if you look for levels of confluence with a fib and a level, and then maybe look on a shorter term basis where, you know, I was looking at a 5-minute chart, and you can see the market already, you know, find a little bit of support. Maybe you can get a rebound. But my point being is that when you can see here how on this 2-hour chart, we had a nice gravestone doji. It's a little bit, looks a little bit long for gravestone doji, but you can see as we return back up here, we failed across these touches. And then of course news came out, this whole thing with with Iran and everything else. So we really rolled down the hill, and any rallies back up, they're going to sell right into it. And so you got to be careful when you do try and catch these falling knives. So my point being is that when you see when you get headlines like that, you get overwhelming fundamental news. You want to go on and be cognizant of that. And so the technicals will allow you to gauge where your risk is, but don't be so quick to turn around and jump in. Realize that there's probably people that are long that said, I don't want to, this is a buying opportunity. And then you probably have some people that also, may be saying, hey, look, you know what? I don't want to, if it gets beyond this, I'm out. And then maybe some other people that may be saying, hey, look, if it gets beyond this level, I'm going to now initiate shorts. And that's why when you first see a market break, you don't want to be so quick to jump in. You're seeing something like that here with the bunds too. Here's a good example here. We did rally back up here on the, ECB news. And what you can see here is we broke here. The market was using a rally back up into the zone to sell. So when we rallied back up, all we did was look at that. Look how they perfectly took out the highs by just a little bit. You see how they goose the stops here? They get, and then look at that. We turn around and fall back down. And on the way back down, definitely you start breaking levels. You do not want to get in the way of something like this. But anyway, that's all we have. Thanks for joining us here on the FX Daily Wrap Up, and have a great rest of the trading day.